welcome to Bloomberg Quint Live. You're watching Trendspotting. I am Shraddha Babla.
And I'm Neeraj Shah, and over the course of the next 30 minutes, we deep dive into specific trends in the market to draw out the key takeaways and implications for investors. First, though, the headlines. Week start to the expiry week for both the benchmark indices, trading with muted moves. The Nifty trades below the 10,000 mark. Auto and metal players weighing in on the index. Broader markets trade with cuts. The Nifty Bank 1/3% in the green. Fortis Healthcare rises nearly 1.5% after TPG Capital-led consortium is said to be close to inking a deal to gain controlling stake in Fortis Healthcare that holds a market value of $1.1 billion. That is a Bloomberg News exclusive. And Blackstone picks up 50% in Indiabulls Real Estate Central Mumbai properties for 4,750 crores. Uber moves out of Southeast Asia by selling operations in the entire region to rival Grab. Let's first grab a sense of what the markets are doing, Shraddha.
So Neeraj, of course, the Nifty continues to hover around that 10,000 mark. Sensex is trading just about flat, down 10 points. Marginal downtick on the Nifty mid-cap index, whereas small-cap index is seeing losses to the tune of nearly 0.6%. Pull up GAIL India, that's the stock in focus that has lost nearly 5% today. There was a PTI report which said that ONGC may buy out GAIL India's 9% stake in ONGC Petro additions. That apart, overall, the OMC space itself is seeing a sharp fall as Brent trades above that $70 mark. So you look at HPCL, BPCL, IOCL, all of them are trading about 2 to 4% weaker. According to Times of India, Suresh Prabhu has said that the merger of MMTC and STC is also on the card. So MMTC is the top gainer on Nifty 500 index, adding another 8.5%. Now STC also seeing gains of about 1.5 to 2%. In terms of volumes, however, it's Cadila Healthcare which is active. The USFDA approval boding well for the stock. GHCL, Indocount, Unichem are some of the other counters which are seeing higher than average volumes being traded, but largely market breadth has turned unfavorable with the advanced decline ratio now at 5:11. Any stocks that you want to highlight, Neil?
Okay, no, so, the usual newsmakers today haven't really moved as much. So the likes of Indiabulls Real Estate, or for that matter, Fortis Healthcare, the two stocks in news, actually one with news and one with presumed news, haven't really moved around as much. Look at Indiabulls Real Estate, that's actually in the red, and Fortis Healthcare to marginally in the green. Just shows that there's a lot of pressure at the broader end of the spectrum, and even good news are being discounted and not being traded very, very well. I think Shraddha has highlighted GAIL and HPCL in a meaningful way already, so I won't dwell too much on those. Those are the top losers, of course, on the Nifty, and we've spoken about them at length. But stocks which are trading close to their 52-week highs or 52-week lows, Jubilant FoodWorks continues to rise and shine, and with this 2.5% uptick, it's trading at fresh life highs, at least 52-week highs, if not life highs. I think it's a life high for Jubilant FoodWorks, so that one continues to rise and shine. Really good going for Jubilant FoodWorks in the session today, so new highs for that. And amongst stocks which continue to grind lower, I think amongst others, so there is some 52-week lows for HPCL, so that one is down about 4% and continues to go lower. There is weakness in some of the sugar names like Triveni Engineering, which is down 3%, Dalmia Bharat, which is down 3%. So these are 52-week lows for that stock as well. Bajaj Hindustan joining their list too. And Max India is down about a couple of percentage points at 84. This one is trading slightly weak in session.
All right, with that, let's shift focus to Reliance Industries. Now, it looks like Mukesh Ambani has big plans for his media empire. Just over a month after announcing the Eros International deal, Reliance Industries now plans to buy more than 40% stake in Saavn, the music streaming app. Samit Sarkar is standing by with the deal contours. Samit first was Network 18, then Balaji, and then Eros, and that was quickly followed by Saavn.
Yeah, so if you see in the Saavn deal, there are two parts to this deal. In the first part, Reliance Industries will be putting in close to 806 crore rupees for 41.1% stake. And how will they get this stake? Well, partially they'll get it from the existing promoters of Saavn Media Private Limited for 676 crore rupees. And apart from this, the company will also be putting in 130 crore rupees in the company, which will be invested by Saavn India for growth and expansion. So total they put in 806 crore rupees for 41.1% stake. Now in the second part of this deal, Reliance Industries will be merging its own digital music service, that is Jio Music, with Saavn India, thereby creating creating an entity worth $1 billion US, that is close to 6,500 crore rupees. And in that entity, Reliance Industries will be holding 81.7% stake. Now, this $1 billion valuation is given by Reliance Industries based on the valuation at which they are buying stake in Sawan India. And in this $1 billion, Geo Music will be valued at $670 million US, while Sawan India will be valued at $330 million US. Now, if you see, Reliance Industries is expecting this deal to complete before 30th June 2018, and they have also committed for future investments worth 520 crore rupees, that is close to $80 million US, in this merged entity, that is Geo Music and Sawan India. Now, why this investment? Well, after creating data abundance environment in the telecom industry at cheaper rate, now they are providing their customers platform to use this data. Along with that, Reliance Industries digital content and entertainment offering will also be strengthened by this investment. Now, they first bought stake in Balaji Television, which is a show content, then Eros, which has movie content, and now they have invested in Sawan, which has music content. It has 36 million songs in 15 languages. Also, it has 900 plus label partnerships, which can be accessed across the globe. Now, if you see, this is Reliance Industries' fourth investment in media. In 2014, they acquired Network 18. Last year, they bought stake in Balaji Telefilms. Earlier this year, they bought stake in Eros International, and now they have invested close to 806 crore rupees in Sawan Media Private Limited.
All right, Soumya, thank you very much for bringing us those details. And with that, we will move on to the first discussion of the day. Now, for the 9th round of auctions for city gas distribution, bids have been invited for 156 districts clubbed into 86 geographical areas. Considering the aggressive bids in the past, what strategy is the largest city gas operator, Gujarat Gas, looking to adopt for the auctions this time around? Well, to answer this and to discuss growth prospects for the company, joining us on the phone line is the Chief Executive Officer, Nitin Patil. Thank you for joining us, Mr. Patil. PNGRB has kick-started the 9th round of city gas auctions. Gujarat Gas has been an aggressive bidder in the earlier round. So what's the strategy this time around?
Good morning. Gujarat Gas has evaluated all the primary evaluation has been completed for all the offered areas, and as we do usually, we are doing in-depth study of certain things, and based upon the economics and commercial aspect of it, we will be doing aggressive bidding in certain areas which has been offered.
Will it be fair to assume that you would be more interested in bidding for areas in Gujarat, given your strong presence in the state?
Of course, the first preference will be in the Gujarat, because we have got already close to 20,000 kilometer pipeline laid, and it will be a natural extension of these 19 districts to remaining areas. So there is no doubt we will be aggressive in Gujarat. But in addition to Gujarat, there are certain locations we found very lucrative from perspective of investment and making a business sense.
So
what areas would this be, Mr. Patil?
See, we have got certain data accumulated with us, and that tells us the demography of it, the population, the vehicle population, and the industrial aspect of it. And based upon that, there are various parts or states will be bidding very aggressively.
So I think the question that comes, Mr. Patil, is that you've enjoyed particular growth rates. Now with analytics and other factors that you spoke about, you have advanced information about pockets which could be high growth in nature. What does this mean for how Gujarat Gas's growth trajectory would shape up over the course of the next couple of years?
See, we always conservatively say that we look at about 10 to 15% year-on-year growth. And that will remain our basic strategy, and we'll be working towards that all the time.
Okay. Sir, I also believe that you were looking at new geographical areas of Silvassa, rural Ahmedabad and Palghar. Is that correct? And how much will these new areas add to overall volume, say, by 2020?
All the three areas has been licensed to us, and very happy to put on record here that already Dadra Nagar Haveli, we have been connected, gas is flowing, a couple of industries already connected, one CNG station is already flowing gas, another two are in pipeline and will be done. Thane, rural and Palghar, again I will be very happy to put on records that the connectivity has been now available with us, and by this weekend we will be firing gas in Tarapur itself.
I was hoping to get a sense, Mr. Patil, of what are these high growth areas that you spoke about in the previous answer B, because you mentioned that while the preference will be Gujarat, there are these other areas. So do they extend to states far and beyond Gujarat?
Yes, it is indeed.
But what areas would these be, if you can share some names?
I will not quote the names now, right? But there are even Chennai. Everybody would like to say bid for Chennai. It's a very lucrative, if that gives any indication to you, right?
So just also shifting focus on Gujarat State Petronet, one of your promoter companies, which will be buying 28.4% stake in your company from Gujarat State Petroleum. So post that, Gujarat State Petronet, of course, will become your holding company. Do you see any sort of synergies coming in from this ownership rejig?
Yeah, you put up the correct word there. It's a synergy. GSPL is a transmission company, whereas Gujarat Gas is fully into distribution of the gas. And both of us together are very complementary to each other, and that gives us a lot of flexibility and agility in delivering our business objectives.
So, just what is your reading on how spot or how LNG prices will shape up in 2018? Because any sharp rise in spot LNG prices would be a key risk for you. So, your thoughts on how you expect LNG prices to move?
Whatever market indications we have got or the information we have on hand, it just states that the LNG prices will remain at a lower side or middle side for next 4 to 5 years. And I have not seen any drastic change into that, unless there is certain global things happening which are beyond prediction.
But gas prices are likely to go up, right? There is a hike that is expected as well. So what would you do if LNG prices are going to stay as gas prices will move up? Will you pass on the hike to ahead, or that won't be the case?
See, all the current fuel prices are somehow related to crude. So crude goes up, prices goes up, there is no doubt about it. So our competitive fuel prices will also go up, and we are confident there will be a place we can pass on those prices to the customers.
So you will pass it on, because I believe April is when we will see the hike, right, Mr. Patil?
Domestic gas price will hike, which is maybe 1/3 of our total consumption. But still they will remain very competitive to the normal LNG prices.
Okay.
Your volume growth in the past has been slightly on the weaker side, mainly because of the decline in the offtake to industries. What is the kind of gas volume growth that we could, what would be a fair estimate for the kind of growth we could see for FY19?
See, we always stated that our year-on-year growth will be 10%, and last year and this year, if you compare, last year it was 5.2 to 5.4. Now this year it is average about 6.1. So that will remain. We don't see any problem into that.
Okay. So, but as far as your EBITDA per SCM is concerned, that continues to remain lower as compared to some of your other listed peers. What is the thought process and plans to increase the same, or will they remain at the kind of levels that we have seen of late?
Thanks for asking this question, because that actually defines our strategy, how we work. When you lay the pipeline are not laid for the 1 year or 2 years, 3 years time. They are there for 30, 40, 50 years. And when you even buy the LNG, you don't buy the long-term LNG for say 1 year or 2 years. It is usually for longer period than that. No doubt our 2/3 is a long-term, whereas 1/3 is our spot and other things what we buy. And that requires your business to have a long-term tie-up of your customers, right? So we believe in to have a moderate price and making say about 4 to 5 rupees of EBITDA margin per SCM, and that is our strategy, where the customer also understand that company is there for the long haul, not for the operate, make money and go away.
Yeah, I'm certain that most people would have that view. Mr. Patil, with the kind of business that you are in, maybe the nature of the work as well, but you have to admit that the operational picture does look or does gyrate quite a bit quarter on quarter, over the quarters as well. And I would reckon that if we look at the last 5 years, then maybe the years as well. What's the steady state operational picture that you forecast or that you believe Gujarat Gas can show or will see over the next 3 or 4 years?
You are absolutely right when you say quarter on quarter the thing changes. Many businesses are cyclical, so in somewhere we are a little bit cyclical in terms of making margins, I can say. The LNG prices do changes a lot, especially in winter they go too high and in summer they come down. And that is where at times we have to squeeze our margin. We do that, and there is a time we make margin, but we also ensure that annual basis our EBITDA remains in that range of 4 to 5. That's what we have stated.
So any sort of indications, if you've already planned for the kind of capex outlay that will be there for FY19?
Madam, we have a capital plan deployed as we go and accruing, which is always 500 to 600 crores per annum. That is through our accruals. However, now the Thane has come up, the permissions are now flowing. We expect early resolution to Ahmedabad issue, and Dadra Nagar Haveli has picked up. So if the situation demands, we do not mind preponing or advancing some of our capexes and may go for 700, 800 if situation demands.
Right, sir, but how much of that would be spent on building CNG outlets? How much will be on the pipeline infrastructure? If you can give us a sense of how the breakup would be.
Once again, thanks for that question. Last year we built about 22 CNG stations. This year inching toward 46. Because last year we have shared in various platforms with our investors, stating that when I took over 2 years back, it was about 80% was the industrial and 20% was the CNG, PNG. And after doing a brainstorming with team, we said that we have to see if we can reach to 60-40, 60% industries and 40% CNG, PNG. Happy to put on record here that currently our about 68% is industries and rest is 32 is CNG, PNG. That clearly indicates what we are trying to do. We are trying to even increase CNG penetration. What we deployed last year was we formed a special team of people and deployed for that. Before that, we did a lot of traffic studies. We identified location spots where make business sense. And if you come across Gujarat, you will find that now most of the highways we are covered. And next year also we will be doing some 50 to 60 CNG stations minimum to ensure that anybody who is coming from Maharashtra, he goes up to Rajasthan or via Gujarat to Madhya Pradesh, he gets a CNG highway. Anybody in Gujarat traveling east to west or south to north, any direction, he will get uninterrupted CNG supply.
So have your commercial operations in Thane, have they begun?
We have got a connectivity done, and this weekend, I think I shared earlier, our first CNG station, mother station, and our first industry will be kicked off before 31st March this year.
All right, Mr. Patil, thank you very much for joining us here on Bloomberg Quint. So that was the management of Gujarat Gas talking about the bidding strategy for the 9th auction. With that, we move on to the primary markets where Lemon Tree Hotels IPO has opened for subscription. The management told Bloomberg Quint earlier that they have no plans to raise any further capital and that they hope to pay off their existing debt in the next few years. Listen in.
There will be a shortage of rooms because supply is slowing down dramatically and demand is continuing at over 12% a year. So we expect the next 4 years will be moving towards top of cycle in the Indian hotel industry, which means that there will be a return of pricing power in this sector. Totally by FY21, we will have 37 hotels under management out of the 77 that we will operate. So 40 hotels will be owned by us, 37 will be managed by us. If you look at our IPO, we are not raising any primary capital because we are fully funded for this growth going forward. Out of the 3,000 rooms we are opening in the next 3 years, 1,600 rooms will be owned by us and 1,400 will be managed. So finally, when you look at these 7,700 rooms I'm talking about 2,900 will be managed and about 4,800 will be owned by us. Of the 1,700 crores, 700 crores has already been invested, and of the incremental 1,000 crores, we plan to borrow 400 more crores, and we expect we will have internal accruals of the balance. So our debt at peak, actually, including, because we will be repaying some of this debt in the next 4 years, at peak will not cross 1:1 debt equity, which is our debt will be less than 1,300 crores. Number two is that going forward with the return of pricing power coming to this industry, we expect we will be able to not only service this debt but pay it off in the next few years.
That's of course an IPO that is coming up. Now to the stock of the day. Unfortunately hasn't quite reacted in the same way. Indiabulls Real Estate selling the stake to Blackstone. Jayesh Johnson to take about the contours of the deal and the possible reasons why the market hasn't rewarded it quite favorably. Jayesh.
Neeraj rightly put the stock of the day, but hasn't reacted in the manner that one would have expected. But first, let's have a look at what the deal is, and how much are they going to divest for, how much, and where the current company stands currently. So if you look at the current deal or the exchange notification that they have sent out, they are going to sell 50% stake in Indiabulls Properties Limited and 50% stake in Indiabulls Real Estate Company Private Limited to Blackstone. Now the consideration for the deal stands at about $1,461 million or thereabouts, which translates into rupee terms at 9,500 crores. Now, how does this 9,500 crores stand against the existing company, the listed company that has an enterprise value of nearly 17,000 crores with a market cap of just over 9,100 crores. Now, let's look at the debt picture, or where they are going to use the proceeds from this particular deal. First and foremost, they are going to repay the debt of the existing company and the wholly owned subsidiaries. Also, they would support the business and the long-term growth of the company. That's where those proceeds will be utilized. Now let's come to the debt picture and see how the debt is divided into the rental properties and the total debt. So the rental properties of Indiabulls Real Estate, that has a total debt of about 4,200 crores. This is as of December 2000 or the December quarter that was gone by, and the total debt of about 9,100 odd crores. Now let's look at how the company will be divided once the structuring is done. So Indiabulls Real Estate and Blackstone will own 50% each in Indiabulls Properties Investment Trust, which is largely the properties that are located in Lower Parel, Mumbai. That is the One Indiabulls Tower and the Indiabulls Finance Center. All the other properties that will be under Indiabulls Real Estate itself. Now how do these two companies then stack up post the deal? Let's have a look at that as well. So IPIT, as I was telling you, that these are the prime properties that in the region of Lower Parel, that they have a leased office space of about 3.3 million square feet that is already complete, with an under construction potential of about 0.8 million square feet. As for the residential segment, what has been completed is just 0.4 million square feet, and the under construction is at 1.6 million. As the the residential space is concerned, or Indiabulls Real Estate is concerned, let's have a look at how that company will look like. Now this has leased office space in Chennai of about 1.9 million square feet. Now this, as of yesterday's exchange notification, they have actually got into an agreement to sell this for about 285 crores, with another planned 2.4 million square feet and a new acquisition of about 0.75 million square feet. As far as the residential spaces are concerned, this is largely in Mumbai and NCR. So the under construction is about 32.5 million square feet, and they have a land parcel of in excess of 1,000 crores. So that is how the entire deal is structured as of now.
It's interesting. However, the stock not reacting duly. This was probably one of the better deals that they could have done, as guests also stated. Happen at a level or valuation which is higher than what they anticipated. Somehow the sentiment not that great. Jayesh, thanks for putting that into perspective. 193 is where Indiabulls Real Estate is trading at. Just before we wrap up, trend spotting though, must mark that it's banks which are holding the index up. I mean, yes, the Nifty Bank 0.5% up, but look at the list of gainers: SBI, ICICI, Yes Bank, I'll throw in a Bajaj Finance out there too, among the financial names, and HDFC. That tells you, gives you ample reasons as to why the Nifty is marginally in the green and the Sensex is about 44 points higher, despite really sharp cuts that have come into IT pack. Wipro and Infosys are down and out today. Wipro certainly is down and out. GAIL, HPCL amongst the oil and gas names. Adani Ports now at 354. So the losers have some fairly deep gashes. It's being balanced out by some gains to the heavyweight banking space, as a result of which we are trading marginally in the green. I don't think the broader market breadth might be looking that impressive. The mid caps and the small caps could have a fairly deep corrective mood, and on cue, about 2:1 in favor of the declines. So the market breadth is certainly not positive.
I also wanted to just highlight how the bond yields are doing today. Just the 10-year bond yield, it's GIND, that's the function. If we can pull it up, trading 4 basis points higher at 7.59. In fact, if you look at it on an intraday basis, the bond yields have also risen to as much as 7.6%, just short of that 7.6% mark. Remember, today there will be an announcement on the first half, the new fiscal year first half borrowing plans, and that's probably something that could weigh on the 10-year bond yield. So keep an eye out for that name as well. But with that, it's a wrap on this edition of Trend Spotting. Up next is Hot Money with Darshan Mehta. Stay tuned in.